Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bearish black crow yesterday after last Friday's indecisive spinning top pattern. There's also a first close below the potentially important May 2020 low at 107.66. And was also capped once again by the combination of very slowly declining long moving average at 108.32 and the only slowly declining short medium moving average, currently also 108.32. The decline was halted at the April 2020 low at 107.25, and below 107.25 we have the 2024 low at 106.93, and then the middle time, currently 106.54. Of the newly drawn and highlighted in dark blue late December 2023 to early March 2024 bearish Andrews pitchfork. For your information, we are likely to have a dead cross of the short medium moving average down through the long moving average. That's a lagging indicator. Now, so far today, a further follow-on lower, attempting to push down through the April 2020 low, but not really managing it as yet. Cable, aka sterling against the US dollar. A bearish engulfing pattern yesterday and a first close below the combination of the flatlining long moving average, currently 125.86, and a 50% Fibonacci line of the July to October 2023 move at 125.90. The cap on the action was again the September 2020 low at 126.72, reinforced by the flatlining short medium moving average, which is currently also 126.72, and the flatlining medium moving average, currently 126.61. The market has moved below the previously mentioned general congestion zone formed between December 2023 to January 2024, between the 126 area up to the 127.75 area. Further down, we have the lows of February at 125.32 and 125.15, the latter being the more significant. So far today, a seeming reactionary move back up towards the combined long moving average and 50% overhead resistance, Fibonacci resistance at the moment. Euro sterling. A possible bullish engulfing pattern yesterday, but only just, which was somewhat surprising if unusual, as last Friday's action was an indecisive doji cross. It was another close over the combination of very slowly declining short medium moving average, currently 85.47, and the combined lows of the December 2022 at 85.45 and December 2023 at 85.47. Further below, we have the lower bull trend line, currently 85.31, of the purple highlighted late January to date breached but not broken expanding wedge pattern, currently at 85.31 to 86.24. Meanwhile, overhead we have the combination of the dark blue upper time, currently at 85.87, of November to December 2023 bearish shift pitchfork, plus the declining medium moving average, currently at 85.87. Overall, the market still remains within the breached but not broken purple highlighted late January small expanding wedge pattern, and also in between the upper time, currently 85.57, and the middle time, currently 84.90 of the bearish shift pitchfork. I recently had highlighted the possibility of the two pipe bottoms, the ones in mid-February and early March, may lead to speculation that we might have a larger double bottom pattern formed with these pipe bottoms. However, this idea is rapidly disappearing due to lack of any incentive to carry it out. So far today, a slightly lower open, an attempt to pierce the short medium moving average and combined lows from December 2022 and December 2023, but balking at it, testing down to the purple colored lower expanding wedge trend line right now. US dollar against the Japanese yen. A bullish engulfing pattern yesterday, if only just, as the market still chooses not to give up on the idea of pushing higher. It was the highest close since 1990, just over the August 1990 high actually, August 1990 high at 151.58. But prices did not seriously challenge the recent high last week at 151.97. Below is the congestion from late February between approximately 150 even to 150 3/4. It seems the top side is still capped by the same capping peak formed by the high back in November last year at 151.92. Now beyond November last year's high, we have the middle time currently at 153.39 of the July to December 2023 bullish Andrews picture, which is highlighted in bright red on my daily chart. We are still within this bright red highlighted pitchfork with the lower time below currently at 146.11. We're also still within the larger purple highlighted February 2022 to January 2023 bullish shift pitchfork, in between the middle time overhead currently at 158.85 and the lower time below currently 144.77. So far today, well, not necessarily much. Prices are sitting just over the August 1990 high, but not willing to right now to challenge the highest towards 152 area at the moment. US dollar against the CNH, the offshore Chinese yuan. A counter to the counter bullish harami yesterday, but it could also be seen as an indecisive spinning top. Below the market, we have the dark blue highland crossover of the flatlining highlighted crossover of the flatlining upper trend line currently at 723.68 and the rising lower trend line currently at 723.52 of the mid-January to date ascending triangle pattern. Now for the last week or so, I had cautioned that the conditions set up for March to be a possible monthly key reversal. Well, it turned out to be so. A monthly key reversal up here in spot US dollar CNH, the offshore Chinese yuan. Just remember that bit. However, that's not all, as though I did not show it here on this chart, there are also monthly key reversals up in March for US dollar against the CNY, the offshore Chinese yuan spot, plus the monthly key reversals up in March for the US dollar CNY 1 month NDF and the 1 year NDF. All these are quite significant, especially we have follow-ons. Overhead, we have the capping action of the neckline currently at 729.45 of the bright red June to July 2023 head and shoulders continuation pattern. Looking below, we have the now flatlining long moving average below currently at 723 even. Okay, so 3 weeks ago I laid out some ideas for potentials below for the then breakout lower from the ascending triangle pattern. Thus, a primary target X is down in the 716.05 zone, with a secondary hard to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now. But for the moment, I'll keep these targets on my daily chart, as we've already had a possible false break lower and maybe even a false break higher as well. So, as I say, I'll keep them for now, but I am willing to retire them in a heartbeat. But, and it is a big but I'm also mindful of the potentials top side of the recent move higher. So for a good order's sake, I've marked for now a primary target X2 top side for a continuing move higher at 730.05 and a secondary much harder to reach target X3 up at 732.80. Now so far today, a small try higher, but not very convincing as one as yet. US dollar against the Mexican peso. A bullish harami yesterday, but it could also be seen as an indecisive spinning top. Prices pierced the overhead 2023 low at 1662.11, but was somewhat surprisingly capped by the declining short moving average currently at 1668.88. This is now the third week that we're seeing this short moving average acting as a de facto downtrend. Further above, we have the some congestion between 1670 to 1680, dating from August last year, within which currently sits the capping bright red neckline, currently at 1674.34 of the February to April 2021 head and shoulders top, followed by the dark blue middle time currently at 1684.04 of the December 2023 to January 2024 mildly bearish shift pitchfork. Meanwhile, below is the lower time, currently at 1650.73 of the same bearish pitchfork, ahead of some significant congestions dating from 2015, and they're stratified on the way down. I'll deal more of those as we get closer to it. Now, so far today, small piercing overhead of the 23rd to 23 low at 1662.11, but a pullback, and now we're slowly testing the downside again.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.